Good afternoon, everyone in this room in Singapore, and welcome for those of you that are dialing in at home. Welcome to this Green Shoot session. We have a very special one for you today. I'm Rebecca from Elevandi, the head of strategy there. For those of you that don't know Elevandi, we're an entity that's been set up by MAS, a non-for-profit, to manage the Singapore FinTech Festival and related public-private sector engagements. So in today's Green Shoots, we'll share two such public sector collaborations for you to learn more about today. The first one we've worked on in collaboration with the Bank for International Settlements Innovation Hub around multilateral CBDCs. In this session, they'll share more about the report that they've just published on CBDCs, including central bankers from Singapore, Malaysia, Australia, and South Africa. The second session will share another such unique collaboration, this time between the Swiss government and the Singapore government around Point Zero Forum. Point Zero Forum is an invite-only event that's taking place in Zurich in June, so please stay tuned if you want to hear more about that. And then after those two sessions, for those of us lucky enough to be here in Singapore, there's lots of alcohol at the back, so there'll be the chance for networking. For those of you joining us online, I'm very sorry that you can't join the networking, but it does mean you don't have to wait to have a drink. So please do relax, settle in, and enjoy the next hour of sharing. So without further ado, I'd like to welcome my first victim to the stage, and that is Wiki from BIS. Wiki will lead this discussion with representatives from MAS here in Singapore, and then joining us virtually, we'll also have representatives from the Reserve Bank of Australia, the South African Reserve Bank, and also Bank Negara in Malaysia. So, over to you, Wiki.
Thanks, Rebecca. Yeah. Thanks, Rebecca. So very happy to see a lot of audience in person today, and of course more audience within the virtual panel. We haven't had a session like this for quite a while, so really happy to be here. So we have a very distinguished panel of central bankers with us here today. Individually, they all have a history of working on CBDCs and have published multiple papers on the topic. Together, they have actually combined their shared experience to collaborate on pioneering work on multi-CBDCs in a project codenamed Project Dumbar. I'm Wiki from the BIS Innovation Hub. It's my pleasure to have worked with them over the last few months, discussed and debated on the topic over 20 workshops, and recently published our findings in a report last month. Project Dhamba looks at how multiple central banks can issue CBDCs on a common platform. On this multi-CBDC platform, commercial banks can transact directly with each other in all the different CBDCs. By directly, we mean the need to hold foreign currencies with correspondent banks is actually eliminated. This could help to make cross-border payments cheaper, faster, and safer. Today, with our panelists, we'll touch on a few areas. Why the interest in multi-CBDCs, challenges in implementing multi-CBDCs, particularly in access policies and governance, and to get some insights into the technical development that we have done so far, and a forward-looking view of what this work means for cross-border payments. Before we start, I would just like to highlight our usual central bankers' disclaimers. The views expressed over here represent, these are our personal views. These are personal opinions of the panelists and may not represent the views of their central banks. So I'll just start off with Alan, sitting right beside me over here. So there's been a lot of prior work on CBDCs by different central banks, of which Project Ubin, which MAS worked on, is one example. How do you see Project Dumbar as different from all these earlier CBDC projects?
Well, first of all, thank you for inviting us, and really privileged to have my fellow central bankers around the world just being part of this initiative and project. So I think Project Dumbar is an opportunity actually to create something together that really tackles at the heart of cross-border payments. So with Project Ubin, we've been looking at this space on a domestic front, and we've learned a lot. I think a number of you who are with me here today in this room were part of that journey, just understanding what the possibilities are in applying distributed ledger technology in solving issues around clearing and settlement. But taking that forward, I think to really solve this problem at scale, I think it's important to understand not just the technology implications, but understand some of the concerns, and I think we will touch upon this today, just on the policy side and what it means from a governance perspective. So I'm really encouraged that we had the opportunity to take some of the lessons that we've learned from Project Ubin, but also at the same time, the opportunity, I guess, to learn from my other central bankers joining us today on the call, whether it's Project Atom, Project COCA, for example, and some of the work that Bank Negara Malaysia, for example, have undertaken in this space. So it was a very exciting opportunity just to look at how it's cross-border payment, not just on a bilateral basis, but if we were to scale this out on a multilateral basis, through some of the work through Project Dhamba, I think that aims to kind of address some of these key issues and challenges.
Yeah, thanks, Alan. So maybe moving to some of our other panelists joining the call virtually. So Lau from South African Reserve Bank, why do you think this work on multi-CBDCs is particularly important?
Thanks, Vicky, and thanks very much for having me. I think I'll make 3 points. So the concerns around the current model of cross-border payments are well documented. The current process to transfer funds cross-border is cumbersome. It involves multiple banks, multiple ledgers, multiple systems, and that kind of system drives complexity and fragmentation, right? And it leads to inefficiencies. So I think Project Dunbar is about looking at how those inefficiencies can be addressed. And if you have cross-border payments that are faster, cheaper, and more inclusive, you could have a system where cross-border trade gets enhanced and you support financial services integration and drive economic activity and ultimately financial inclusion outcomes as well. I think for me, it's also about investigating how we can continue to make central bank money available for settlement on different platforms that are enabled by technology, because central bank money is a safe and riskless settlement asset. So I think Project Dunbar builds on the work that's been done in various central banks with retail CBDCs, wholesale CBDCs. And so it is the next evolution in CBDC exploration. Thanks, Vicky.
Thank you. So I do see that, from our audience over here, many of you guys are actually from financial institutions. So my next question to Adam is really specific to this. How is Project Dunbar relevant to financial institutions? We've done a lot of work within the central banks, but how is it actually useful and relevant to financial institutions out there in the industry?
Thanks, Wiki. As you and Lila have both mentioned already, actually, the project's aiming to reduce the cost and speed up the transactions for financial institutions, but ultimately the objective is to allow them to offer better cross-border payment offerings to their clients, so to make them cheaper and faster for clients. And so what you can expect to see from that, I think, is potentially an increase in the volume of cross-border transactions that they're involved in processing, especially in areas where so the current high fees have made those sorts of transactions uneconomic. But on the other hand, one of the ways in which this project is aiming to reduce costs and increase speeds is to cut out the correspondent banking complexities that currently create problems in cross-border transactions. And so to the extent that financial institutions are really involved in that business, I think they could expect to be doing a bit less of that if a model like this was successful in getting up. So implications for financial institutions, I think, in short, is that they could probably expect to see a change in the composition of the sorts of activities that they're engaged in to facilitate cross-border transactions.
Thanks, Adam. So I hear that there's probably going to be some changes in maybe the structure of how such services are provided, but there's definitely opportunities for financial institutions to actually capitalize on some of these changes and really, I guess, figure out different ways of actually benefiting for some of these advances. So next question goes to Kakit from Bank Negara Malaysia. Really happy that I get to meet him just last week. Now that borders are open, travel is a lot easier for us. So Kakit, we see that there have been a lot of broad interest in enabling more seamless and integrated regional payments, one of the topics that we've been talking a lot about. The concept of a regional settlement platform is not new. We have always been talking about the potential ASEAN payments platform, for example. So the question to you is really this: why do you think this idea of an ASEAN payments platform has still remained that of just an idea, but have not really seen much advancement since it was first mooted?
First of all, thanks Vicky and the BIS and also MAS for inviting me today. So over here in ASEAN, we have been working to foster cross-border connectivity to support better trade, remittance, and also tourism activities. And this is underpinned by the ASEAN Payments Policy Framework that was introduced in 2019, which has set out a clear vision to establish a network of fast and efficient cross-border payments in this region. Thus far, 6 retail payment linkages have been launched, and I'm proud to say that the vision of an ASEAN payments network is no longer just an idea. In fact, we are now a step closer towards realizing this vision. Having said that, the first step that we have taken is to pursue such linkages on a bilateral basis. But 3 years on, there are now serious discussion among the various stakeholders within the region to look at how we can transition the web of bilateral linkages that we have built into a network of a multilateral network of cross-border payments that are fast and efficient. And in this regard, the findings from Project Dunbar definitely offer important lessons to help us tackle some of the challenges in building a regional payments platform. Let me give you an example. I think when we look at the challenges of building a regional payments platform, one of the common challenges is that it is difficult for diverse parties to share and operate a common platform. And despite the considerable challenges, we attempted to tackle this via Project Dunbar. And leveraging on DLT, we successfully developed a working prototype that enabled each individual central bank to retain segregated and granular control of the shared multi-CBDC platform. By unbundling the governance and control of the platform, this helps preserve the autonomy for each central bank in critical areas such as the lifecycle management of CBDC, data sharing, as well as the application of local rules and regulation. Now, having said that, issues surrounding governance and ownership is just one of the many challenges in operating a regional payments platform. There are other important issues that needs to be tackled, and this requires strong political will, commitment from various participants, as well as a convincing business case to be made. While there are many areas remains to be explored, I think the key learnings from exploratory projects such as Project Dunbar has definitely laid a good foundation for us to take this forward and to pave the way for the successful development of a regional payments platform in ASEAN. Let me stop here.
Yeah, thanks, Kakit. So I do hear some of the challenges relating to geopolitics, of which perhaps decentralized technologies like distributed ledger technology could really help to alleviate. So we are going to go into some of these details later on and as part of the panel. But I just wanted to point back towards Lau, because South African Reserve Bank actually runs a regional RTGS for the South African Development Community, what we call the SADC. So we have really appreciated your views during the project itself. So maybe we just want to hear your views here for our audience. Do you have any additional views to add from your perspective about the potential for regional platforms? And what are some of the challenges faced?
Yes, Wiki, as you point out, so South Africa runs the SADC RTGS, which is a single currency settlement system. It currently settles only in the South African rand. But the platform does have functionality to settle multi-currencies as well. So far, it just hasn't settled in any other currency other than South African rand. As I understand it, there may be issues of liquidity with having, your funds spread across different currencies that you use for settlement. The system currently also doesn't allow for cross-currency settlement. So I think there is a question around, demand for different currencies for settlement. Is there an active interbank market for different currencies? And then putting the necessary processes and support in place to allow for settlement in other members' currencies or in other currencies that are used for settlement in the region. So I think those challenges are probably things that you would need to consider if you have a platform like Dunbar with multi-currency settlement. Things like liquidity being spread across different currencies, and just the different central banks putting the necessary processes and mechanisms in place to allow for the currencies to be issued on the common platform as well. Thanks, Vicky.
Thank you. So this brings us to really the other parts of the discussion. So where we want to go a bit deeper into some of the challenges that we saw as part of the project. So before we go into that, just wanted to highlight to our audience joining virtually, feel free to raise some of your questions through the Q&A button in the chat. So we will help to answer some of these questions along the way. So Project Dunbar itself, actually, we identified 3 key challenges in implementing a multi-CBDC platform. They are access policy, governance, and jurisdictional boundaries. For today's discussion, we'll touch only on the first 2, really so that you guys have an incentive to read the report for the final challenge. Let's start with access, which is really one of the toughest challenges that we face while looking at the project. So in fact, even now, we have not found a perfect solution, and it is still a balance between different trade-offs to really try to achieve some form of an optimum solution, but even that is probably not the best possible solutions that we could have. So I'll start this question with Adam. How would you characterize this challenge of access, and how do you view the different approaches to solving this challenge?
Thanks, Wiki. I think the toughest challenge regarding what you describe as access is probably best described with an example. So if a bank domiciled in Singapore wants to transfer Aussie dollars to another bank in Singapore, the question is, do any banks domiciled in Australia need to be involved in that transaction? Now, in today's system, Australian banks would be involved because the system of correspondent banking means that their balance sheets would somehow be affected and they are legally obliged to conduct some due diligence. But Dunbar is deliberately breaking down the system of correspondent banking, in which case the involvement of Australian banks in the example transaction I've just given becomes a policy decision. On the one hand, if we maintain their involvement to authorize those transactions, we'd be carrying over a lot of the features of the current correspondent banking system that make it slow and that make it expensive, which would arguably defeat the main objectives of the exercise. But on the other hand, if we totally remove their involvement, that would mean that there are fewer controls, albeit often duplicate ones, to prevent financial crime and potentially implement exchange controls for currencies that use them. And so I think, yeah, my colleagues will agree that more work needs to be done on just how far from the status quo we can move with a system like Dunbar.
Yeah. Thanks, Adam. So maybe just looking at our other panelists on the session itself, do you have anything else to add? So maybe start with Alan. What's your view on the access policy part?
Yeah, so I think through the project itself, I think we are very privileged to have, I guess, not just the central banks, the commercial banks, I guess, being involved through the process, just giving feedback on what's possible, what's not. And of course, I think with the technology partners, Partio and also R3, I think that it's given us, I guess, different options that enable some of these choices to be made, whether access is going to be direct or indirect. I think there are arguments to be made for both. And the good thing about the platforms, technology platforms, is giving us the optionality to enable some of these different options. And I think that's going to be even more important as we kind of go into, I guess, adding additional jurisdictions whereby there's a choice, for example, in a given jurisdiction where you might allow direct access to, let's say, all the participants, but in other jurisdiction, you might want to have maybe an indirect model where you have maybe some of these key financial institutions, for example, providing and having access to that common platform that Dunbar aspires to be. So I think that those are a few things that perhaps we can think through, but the encouraging thing is that, at least from a tech perspective, we have a few choices as, I guess, as policymakers.
Yeah. Thanks, Alan. So I think one of the really interesting thing that we saw as part of the project is really that when we think about access, it's really not just a single access. We tend to talk about access like it's just a single concept. But in fact, you know, when we are doing the project, we realize that there are multiple levels of access. First is access to the platform itself. So that's really about having that ability to connect to the network, having the ability to send messages to each other. Then there's also access to whole CBDCs, which in our case, because it's all CBDCs, so we are saying that all financial institutions have the ability to hold CBDCs directly. Now, the really interesting parts come to that ability or access to transact with CBDCs, of which, you know, there could be a direct access where you are able to transact directly with each other, or an sponsored or intermediated access where you have to transact through a financial institution. So this really brings to the other part of the question, which is how do we actually optimize the access model? On one hand, we need to have compliance to AML/CFT. On the other hand, we do want to make cross-border payments as seamless and as fast as possible. So those are some of the questions that we were really thinking about as part of the project. And maybe just back to, you know, our other panelists virtually, anything specific to add to, you know, your views about access policies? Yeah, Kakit?
Thanks, Vicky. I tend to look at the issue in the perspective of a spectrum. So the indirect access may seem achievable in the shorter term, and that potentially could be something that a multi-CBDC network can start with, something that is quite aligned with the model that the industry is familiar with. But slowly, as we progress through the years, we can position the direct model as an ideal state to be achieved in order to derive the greatest level of efficiency. And I think just alluding to what Alan mentioned just now, technology has offered us various possibilities. And more importantly would be the policy discussion that needs to be made between the relevant policymakers and central banks to see how some of the regulatory policies or concept can be further streamlined or harmonized such that the direct access model could be something that is a reality. So I see this as a journey, and you know, with subsequent POCs, we would be able to gain, you know, baby steps towards achieving the level of efficiency that we need for cross-border payments.
Thanks, Kakit. Anything else from our panelists joining virtually?
Yes, thanks, Vicky. So, I mean, I agree with what the previous panelists had said as well, right? I think if you have a highly regulated environment, like a payment system or a settlement system, there will be trade-offs between efficiency and between meeting the compliance requirements to ensure the safety of that system and so forth. I think it's also not about replicating the current model on DLT, but really looking at how technology can help us to address some of the inefficiencies of the current system. And that may not be able to be achieved immediately. I think it is an iterative process. So if you have that flexibility in the design, where you can move from something which is perhaps not as efficient as you may want it to be, but over time, through further testing, further collaboration, you could then get to that model that is more efficient. If I look, for instance, at what happens in the SADC RTGS system, you would have commercial banks that are onboarded through their central bank. So the central bank has a minimum set of criteria that it assesses the commercial bank against, and the central bank can develop additional criteria that it will allow commercial banks in their jurisdiction to be onboarded onto the SADC RTGS, where they then get a settlement account and so on. So that may not be the most efficient system, but as I said, there are lessons that we can learn from what's currently in place, and then look to see how technology can enable something which is more efficient and gets you to the objectives that you ultimately do want to achieve.
Thank you. So I think Project Dumbar is really intended to be an exploratory project. So, you know, when we talk about some of these challenges, these are really baby steps towards looking at achieving some form of good solution that we can use for cross-border payments. What is really important over here is that we have seen that there are various design options that we could potentially use, and these are really dependent on the policymakers, but at least from a technical prototyping perspective, we have seen that actually we are able to support all the various different policy models. And I think that's really a big step forward for this one of these initial projects into this idea, this space of multi-CBDCs, where I guess once we start looking at widening of access, allowing foreign entities to hold CBDCs, that's really one of the prerequisites to enabling much more seamless cross-border payments. Then some of these questions would need to be explored in much more deeper depth. I'll just move on now to the next big challenge that we saw as part of the project itself is really around governance. Governance is probably one of the most interesting challenge for the project. Now, when we look at central banks, we are very used to being the trusted central party and the focal point of activity within our jurisdiction. So, for example, in Singapore, we have the MAPS Plus systems, we have the FAST systems, and at the center of it is always the central bank, MAS, running, operating, owning the system itself. So the big question is, in this context of cross-border payments, when we have multiple central banks coming together to share this common platform, who is actually a trusted central party for such a platform? And if there are no natural central parties, how do we get multiple equal parties, in our example over here, the 4 central banks, to actually share a platform? So I'll just start with Lau again. So SARB, as we just heard, is one of the few central banks in the world with the experience of running a regional payments platform, the SADC RTGS. So Project Dunbar takes this a step further by proposing a shared platform cooperatively managed by central banks. What are some of the likely challenges relating to governance that a multi-CBDC platform will face? So that's the first question. And the next is really, how well do you think this will actually work out in real life? Because when we were doing the project and the report, it is still a theoretical approach to solving this challenge, but how well do you think this will work in real life, especially with your experience of running a regional settlement platform?
Yeah, so the SADC, I mean, just to reflect a little on the SADC RTGS and the governance structure there. So the SADC RTGS is located within like a SADC governance structure. So you have, you know, within SADC, there are heads of state, ministers, central bank governor committees, and so on. And so the system is owned by the Central Bank Governance Committee, but it's operated by the SARB. So the SARB is designated as the operator of the system. The system is also designated as a settlement system within the South African legal framework. So the National Payment System Act is applicable to the SADC RTGS. So I think the regional model that we have is quite unique in that way, right? So it has this governance structure with committees and approval layers and all of that. And it also has a central operator which runs the day-to-day operations of the system. The SARB also then oversees the overall operation. So from a risk management perspective, from an IT perspective and all of that, all of those functionalities are enabled within the SARB's framework. So I think that's quite a centralized system. If you look at something a little bit more decentralized, where you have multiple stakeholders that then share in the platform, I think there are complexities that come with that in terms of decision making. How do decisions get made and so on? Do you have who's the central operator of that system, and how does that work? I think for me, a starting point with Dunbar would be, if we assess it against something like the PFMIs, and we look at things like governance, where are the areas that where it ticks all the boxes, and where are the areas where there's future things that we would need to think about? I think a lot of the governance arrangements can be managed through contractual obligations. So if you look at what in the SADC RTGS space, there are a number of legal agreements that support the system as well. So I think that is one way that some of those risks can be mitigated. You could have various service level agreements, MOUs that are in place and so on, where there are rules that people then agree to be bound by. But then I do think in terms of the accountability and responsibilities, those need to be clearly articulated as well, so that you do know where do you need to go when things do go wrong. And if you need to, for some reason, exit participants from the system, that there's also clarity around how that happens. I'll pause there. Thanks, Vicky.
Thank you. So what I'm hearing is really from a decision-making perspective, there is a need for stakeholders engagement. There's a need for making sure that decision-making is done in a fair and equitable way. So the other question is really, you know, we talk about some of these governance problems, and then the question is really, can we actually look at some technological solutions to actually alleviate some of these problems? So Kakit, I'll turn to you with this next question. We discussed at the start about the idea of an ASEAN payments platform still not taking shape after many years. Do you think that new technological advances, particularly in decentralized technologies like blockchain, can solve some of these governance and ownership problems, challenges that we see in running a common settlement platform?
Thanks, Vicky. I think new technological advances such as the DLT has definitely a role to play to solve the complex governance and ownership challenge in shared payment platforms. While there may be doubts in entrusting the management of a platform to a centralized operator, the decentralized nature of DLT would enable individual jurisdictions to retain control of respective parts of the multi-CBDC platform. And if we take Project Dumbar as an example, this is achieved through the creation of 4 logically separated domestic sovereign networks, which are interconnected via a shared multi-CBDC network. By hosting specific notary or validator nodes, the central banks can have complete autonomy in critical functions such as the issuance, redemption, and destruction of CBDC, the application of local rules or even currency-related rules, as well as issues relating to data privacy and also data sharing. So by unbundling the control and governance through the use of DLT, this helps to elevate some of the national security concerns, as well as preserve the autonomy and sovereignty of central banks with regard to the CBDC that they issue for cross-border payments. Strict technical controls can also be implemented in order to safeguard such autonomy. In addition, controls are also implemented to preserve resiliency, such that failure by any particular node would not cascade into a platform-wide failure. Having said that, technology would need to be supplemented by the appropriate governance framework. And I do echo the point by Lau that we need a diverse and inclusive decision-making framework that are transparent and agreed by the participants, such that platform-wide decisions can be decided and be put in place such that all participants will be bound by those rules. So this essentially achieve the twin objective of promoting universality in terms of the application of rules in a common platform, but at the same time guaranteeing the autonomy for the individual central banks, so that there is assurance and comfort for the respective jurisdiction to share and jointly participate in a multi-CBDC network.
Thanks, Kakit. So it is really interesting because as you were describing, you know, what we see as a multi-CBDC network, I start to see this vision, this view where we start looking like a public blockchain like Ethereum. You know, Ethereum acts like a single shared computer shared by everyone in the world. But what we are describing over here is really a shared global or a regional financial platform for central banks and financial institutions. So this is, I guess we are starting to look at this idea of a global computer, but really for the financial industry. So if we were to have something like this in the future, what sort of new opportunities and efficiencies could such a shared infrastructure unlock? So I just want to throw out this open question to our panelists. Maybe you can start with Alan.
Yeah, thanks. So I think one way of looking at it is a single asset within a single network. That's one view. In this case, an asset could be a CBDC. Another way of kind of looking at this is that maybe if I could use an analogy, it could be a highway where there are different types of vehicles that are running on the highway. You could have public buses, you could have private cars, each with its own manufacturer and issuer. So if you look at, going back to your analogy on a public blockchain, perhaps that could be one option as far as a highway is concerned, with different forms of liabilities that are issued, whether it's by a commercial bank, a regulated financial institution, or a central bank running on this common highway. As far as governance is concerned, there could be a set of rules as far as getting access to the platform. How do you handle when there's an accident on the highway? How do you reconcile if there are issues? And perhaps there's something that's specific for that particular mode of transport or that particular asset in this case. So I think there's a different, I think to your point earlier about different layers and a tiered model that you can kind of look at how do you construct governance on such a platform. I think, and onto the point earlier on about being inclusive, I think it's very important as well, because the strength and the weakness in such a platform is that because you're trying to scale this across the world, you need something that's as inclusive as possible, but yet at the same time, you want to make sure that decision-making is not encumbered by the fact that you need to consult everybody. Perhaps there are decisions that could be made and delegated out to individuals that are quite happy if it's trusted party to make those decisions. But perhaps there are others that are more fundamental, maybe require more deliberation. So I think those are the different options that are on the table in front of us.
Yeah. Thanks, Alan. I'm sure our panelists will have a lot more to add. So I just wanted to ask one question, which is, in this particular example then, what do you think is the scope of such a platform? How do we actually draw the line? Is it something that is only meant for central bank digital currencies, or are we looking at a future where perhaps all the different financial assets, perhaps some bonds that are issued by different financial institutions could also reside on the same platform? How do we actually draw this line? Adam, Kakit, or Lai, any views on that? Yeah, Adam?
Thanks, Wiki. I just wanted to start off by acknowledging that a white paper covering exactly this sort of idea was published at the end of last year. It's what the authors call a regulated liability network, because it's a platform for all regulated institutions to issue liabilities that are denominated in national currency units. So it's exactly what you described. You imagine a platform for CBDCs, but maybe also bank deposits at the same time, all residing on the same platform. And it's had quite a bit of attention recently. The proposed benefit being that it creates a less siloed system with common standards, as well as improving the technology of sovereign money without undermining private money. And I've an open mind to that sort of idea. I certainly think it deserves exploring. One of the things you just might ask yourself when considering whether this is the best way forward, and especially if you want to add other financial assets onto a network like this, is whether having all entities on one system, all these assets on one system, is sufficiently supportive of innovation. So you have one very large and now doubly critical infrastructure. Might that be necessarily too slow to update in the face of innovation? And might it not preserve the right competitive pressures to innovate if actually everyone is bound by the same infrastructure? And also just presumably growing the number of interested parties only exacerbates the governance challenges. So while there are benefits, I think there are some serious, some challenges to overcome as well.
Yeah. Thanks, Adam. Anything else to add from Kakit or Lau? Yeah. Maybe I'll just add on my own views, and then we'll see if there's any other views from our panelists. So I think this idea or this point about the size of a network is a really interesting one, because even within our project itself, so we aren't even talking about digital assets, but really just about digital currencies. what is an optimum size of a network? Is it a regional network or is it a single global network? There are multiple perspectives to this. One of it is really just from a geopolitics perspective. Can you imagine, you know, just some of the major powers in the world, for example, Europe, Russia, China, US, could it be possible that all four of them resides on a single shared platform? So that's just one of the perspective of, you know, the size of the network itself. Is a global network really possible, or is it more likely to be a regional network? Then once we start talking about digital assets, then I guess there's also another technical perspective of scalability. Now we talk about, you know, we are quite comfortable that if you are doing a high value payment systems for a regional settlement network, we do have the technical skill to enable transactions. But once we start talking about all the different assets, would scalability start, from a technical perspective, would scalability start to become a problem? And also from a governance perspective, what Alan was just mentioning just now, how do we actually, how do we look at the scope of such a network itself? Who makes the decision? Is it just the central bankers? Do financial institutions also have a say, because now it is also their assets? So there are multiple questions that we really need to answer in terms of this view of how big a network should be. I'll just pause here to see if there are other views from our panelists joining virtually.
I mean, Wiki, so I agree with all the inputs that have been made so far. So I don't have much to add, but I do think it is definitely an area that is worth exploring, right? So do we have this one system that everyone can have a node into, and you can, you know, issue CBDCs on, you can issue a bond on, you can issue a share on, and you can trade and all of that. I think it sounds like the most efficient system. Technically, it's probably possible, but I think that's also the beginning of the inquiry, right? So we have to then say, technically, yes, it's possible, but then there are a number of other challenges that you all have alluded to around scalability and governance and all of those things. And I think it is when you're in a sector that is as regulated as the financial sector, that these things do start becoming problematic. And so then I think the next question is, if we do have regional networks, how are those regional networks able to interoperate and possibly integrate with one another so that you can still have some efficiencies without necessarily having maybe a one global system that, as Adam pointed out, would be super systemic potentially. But I think it's definitely an area that is worth having the discussions about and having further explorations around. So yeah.
Maybe just a small point. I do agree with all the pointers by my fellow panelists. And when you were expressing the views just now, it got me thinking of the internet. So the internet is like the global highway, and you have various parties that come along and develop applications that could talk to one another through APIs or through various protocols. So that essentially would be an ideal state that perhaps we can aspire towards. Granted that, you know, instead of creating a giant network where every asset would be transacted on it, perhaps one of the first steps would be to see how the various blockchain networks can be made interoperable with one another to facilitate the seamless exchange of assets, you know, whether it's central bank money or commercial bank money, or even, you know, stable coins. So this, I suppose, will be more manageable in the short term. And I think, you know, as we move along and with better advancement in technology, perhaps the day may come where, you know, we could have perhaps a global network, a financial network that facilitates seamless transfer of financial asset with the relevant controls to mitigate the associated risks.
Thanks, Kakit. So I really like your point about bringing up the internet, because that's also why I guess, the title of this particular session itself, we are talking about Web 3.0. So it's really the idea about looking forward. How do we see the future of payments? How do we see the future of connectivity? While we are within the central banks, we are doing work on CBDCs or multi-CBDCs. Within the commercial sectors like, say, Patio, R3, there is a lot of work also on potential use for commercial bank money in tokenized form. And of course, within our fintechs as well, there are also views about stable coins and how it could be used. I guess one of the big picture that we are really looking forward to in terms of the future is really how does all of these different things come together. And that brings us nicely to the next part of our discussion, really talking about further exploration, what we could potentially be looking at after this phase of Project Dumbar. But before that, maybe let's just do a quick round out on some of the technical work that we have done. So we spoke, in the earlier parts, we spoke about some of the challenges and how we have solved them. I think one of the really important things that we did as part of Project Dumbar is actually building the technical prototype with the help of our partners like Patio and R3, and really showing that there are physical technical solutions to the challenges that we have mentioned. So let's just turn towards this technical perspective and see how we can, how that has actually progressed. So Alan, I'll look at you again, to just help to shed some light on some of the work that we have done. The early CBDC experiments will focus very much on testing technological capabilities, what we have done as part of Project Ubin. Now with Project Dumbar, it looks like we are applying proven technology to solve increasingly difficult problems. From a technology perspective, how well do you think we are doing?
Yeah, if I would kind of reflect back, kind of contrast, I guess, the earlier days of CBDC experiments and versus where we are now, I would say that for Dunbar, we're not really exactly starting from scratch in terms of, for example, which protocol should we use? Do we figure out how do we do privacy preserving asset sharing, for example? I think the conversation has been elevated, and that's partly also down to the maturity, I think, of the technology. In fact, for Dunbar, both, I guess, Patio and R3, for example, has come in forward with the respective CBDC sandboxes. So you're not really starting from ground zero. You're starting from an established base. You're not figuring out how to do tokenization, for example. It's there. But then it's the conversation around how do you support some of those decision points, governance, access, the different modalities. So I think that's a different level of conversation. Granted, there's more to be done on the technology side. But I think that's that shift, generally speaking, less of maybe a lower level conversations on the choice of the technology itself, but more about how do we apply that for specific technology. And I think the question around things like operational consideration has come up more. More conversation needs to be done, but I think that's the shift, and that perhaps reflects the maturity of some of these CBDC projects.
Yeah. Thanks, Alan. So I guess what we are seeing is really that from a technology perspective, existing technology solutions works well. It's really about how we implement it. And I guess from a Project Dunbar perspective, proving this technical viability is a first milestone. So my question now to Lau and also to Kakit, what do you see as important next steps for us, both as part of Project Dunbar as well as the central banking community, in taking this work further? Maybe you can start with
I'll maybe go.
Yep.
Okay. So I think the next steps should be to look at the areas highlighted in the report from Project Dunbar that we've indicated require further work, right? So we should prioritize those areas to look to gain further insights, answer the questions that have come up, look into the unknowns that are discussed in the report. I think there's also an opportunity to work with regional bodies, so something like the SADC RTGS, regional systems, and look how you can leverage the overall system that has been put in place there from a governance perspective and so on, and access and all of those things. And how can you make that system more efficient? How can you enable better access or different access through technology? So can you look at having, for instance, a CBDC that operates within a regional platform. How would that work? So I think there's definitely further exploration that can be done in those areas. And then to see ultimately, can you have various regional networks that can speak to one another? I think in parallel, this work around this global system can absolutely be explored as well. But I think we must chip at this thing step by step. It's not a big bang approach. We're not going to have a new system, you know, that gets developed overnight. I think we do have to move sort of cautiously and move in a way that looks at something at a regional level and then builds on from there. So I think there definitely is opportunity for further exploration, for instance, with the SADC RTGS. I just had a discussion with some of the guys last week around, you know, tokenization and allowing for CBDCs on the platform. And there's work that's being done around a renewal of the SADC RTGS. And part of that is a technical, looking at the technical capability and looking at the future world of, you know, distributed ledger technology and so on. So I definitely think there is opportunity where DLT could be utilized in the current system. And it's just about how that does get done. Thanks, Vicky.
Thank you. Kaki?
Yeah, so I think what Project Dumbar has demonstrated is the technical viability of MULTI-CBDC network. And now I suppose the focus should be dedicated towards answering some of the tough policy questions that we central banks encounter during Project Dunbar. Your issues surrounding what is the most optimal access policy, the most optimal governance framework. How do we decide on who to admit in the MCDC network, and even on questions of expelling a particular member. So some of these policy questions would need to be answered, if we want to eventually transition into a production-ready platform. And invariably, this will also involve issues surrounding opportunities for further harmonization of regulatory requirements, because we streamline regulatory processes that would definitely help reduce the frictions for cross-border payments. My second point actually relates to the business case. So while we have solved the technical and potentially the policy questions, there's also the business case consideration that needs to come into play. And to what extent settlement using local currency, which is what a platform like Multi-CBDC, like Dumbar is designed to achieve, would be something that is commercially viable, in the longer run. And I suppose this relates to the broader question about liquidity, of currencies and the availability of a deep FX market in specific currencies that would facilitate, transactions in leveraging on local currency. And I suppose in order to address some of this, it might be necessary to start within a logical grouping of central banks, perhaps within a region that has strong intra-regional trade, such that we would guarantee a certain level of business or volume to the platform, and then with proven viability of a regional network, it can then be scaled up to perhaps serve a broader geographical coverage globally. So I suppose these are the two aspects that warrant further exploration in the next phase of Project Dunbar.
Thanks, Lau and Kakit. So I do hear that some of the areas of further exploration are really, I guess, further deeper exploration in the space of governance as well as policy. That comes very much from a central bank's perspective, but also from a commercial viability perspective. So my question to Adam is, we have focused a lot in the current phase on central banks because we're focusing a lot on governance and policy. Do you think in future phases, are there other stakeholders that would be important to engage, as part of this work that we are doing?
Thanks, Wiki. Yeah, look, I think future work would firstly need to spend more time talking with the financial institutions that might use the platform. I mean, for example, one of the issues that they raised about Dunbar is that it's currently proposed as a real-time settlement platform, which uses up a lot of FX liquidity and could slow adoption. So we'd need to work with them to find workable solutions for that. I think we'd need to work with the government agencies that are responsible for detecting and deterring financial crime to help us work through the access issues. And also, since something like Dunbar does involve sharing a critical national infrastructure, you'd presumably want broader government consultation as well. Thanks.
Yeah, thanks, Adam. So maybe we'll just move on to some audience questions. We do have some audience in the room with us. Let us know if you have any questions. I also have a couple of questions from the virtual audience. So maybe I'll just highlight a few. So, wow, there's this really interesting question. Are central banks using these projects to test and understand CBDCs only? Or do central banks see issuing CBDCs in the future as a possibility? So is it really just for experimentation's sake, or is it something that, you know, have some views or some plans towards productionization in the future? Yeah. Alan?
I think the answer is both, right? I think that's certainly the intention. But notwithstanding, I think there is a possibility for private sector innovation to be sparked through experimenting with CBDC. I mean, Patio is an example that came off Project Ubin. So I think that there's those possibilities that are out there. I don't think it's necessarily doing Project Dhamba or doing CBDC experimentation just for one objective. I think there are multiple objectives that we could really achieve from here. But of course, the idea of issuing a new form, I would say new form of money, I think that requires more consideration beyond just the technology.
Yeah. Thanks, Alan. Any other views from our virtual panelists? There is also another related question. So what are your views on CBDCs versus stablecoins? Maybe I'll just share my perspective first, and then we'll have other panelists chime in as well. I do think that, you know, when we talk about CBDCs, tokenized commercial bank deposits, stablecoins, ultimately they are very similar, except for one main thing, which is really who's the issuer and what sort of regulations they are subjected to. Now, from a technological perspective, they are very much similar. In fact, if you were to say have a central bank back the liability of a stablecoin, for example, then immediately you could call it a CBDC. That's really just from a legal perspective. So I do see that, at least from a development perspective, from an experimentation perspective, there's a lot of learnings across all of these different projects. Now, like what Alan just mentioned, you know, there are commercial projects that came out from central banks' experimentation. Even within central banks, we are also learning from what's happening within the commercial bank world, within the fintech world, within the crypto world. So there's actually a good exchange of knowledge and experience among all of these different parties. And in fact, what we are doing here today is really just that. I mean, in this room together, we do have central banks, we have financial institutions, we have fintech, we have crypto companies, and that is really a good way of us really sharing and learning from each other. Yeah. Maybe just back to our panelists as well. Anything to add, you know, to these two questions? Yeah, whether it's CBDCs are just experimentations, and the other question is, how do you view CBDCs versus stablecoins?
So maybe I'll go first. So I think the CBDC exploration that central banks are doing is critical because it's there to inform what is the role of central bank money in a future world that is increasingly digitized. So I don't think it's exploring just for the sake of exploring. I think it's exploring to inform critical policy questions that the central banks then need to answer. And I think it is, I mean, the issues are complex, right? You need to look at it within the mandate of a central bank and how does it potentially impact on the mandate and so forth. So from a South African perspective, it's too early to say that we will issue a retail CBDC or we will issue, a wholesale or any kind of CBDC. But it is that the exploration is critical for us to allow us to make informed policy choices that maintain the safety and integrity of the payment system. On CBDCs and stable coins, so I agree with you, Wiki. For me, it is about the issuer. It's also about having stable coins being issued within a legal framework that provides certainty to the issuer of the stable coin, but also to the holder of the token, so that when you want to redeem your stable coin, you are able to do that, right? With CBDCs, I think if you have something issued by a central bank, it will continue to be a safe, riskless settlement instrument or form of money. So I think while the technology that enables them is similar, I think the legal consequences of the two are different. And I think that is where, at least from a South African perspective, the work is still being done to see how can we develop the necessary frameworks to support how these things get issued in a way that ensures that me as a holder of the token is able to redeem when I need to, and all the other safety checks and balances are in place with that as well. Thanks.
Yeah. Thanks, Lau. So thanks everyone for this excellent discussion and open sharing. I think we had a lot of fun talking to each other. So I guess maybe just one quick last final closing question, maybe just a quick answer from all of you. Do you think we could see an Asia-Pacific or South African regional multi-CBDC network in the future? How far away are we? Starting with Alan.
Is it a yes, no answer? I think the answer is maybe, but I think what's important, to me the question is not so much whether it's going to be a multi-CBDC platform, it's really a combination of different technology. How does it integrate with existing instant payment system, other forms of digital assets? So I think it's a combination of how do we enable maybe a more efficient cross-border payments, and to do this in a way that's not siloed by country, but across the region. I think that's what, to me, that's the world. Whether it's through multi-CBDC or multiple DCs, I think that's an open question.
So it sounds a lot about connectivity and interoperability.
It's about yes, that's right.
Yeah. And what about our other panelists? Yeah, starting with Kakit or Adam?
Okay,
yeah, Adam?
Thanks, Wiki. I mean, I might just tackle the second of your questions in terms of how far away are we. I think we're potentially infinitely far away in the sense that central banks are also exploring other ways of solving or improving cross-border payments. This is one idea of many that we're exploring. So, for example, the BIS Innovation Hub has developed the blueprint for bridging fast payment systems. So it's still too early to say whether this is even the most promising idea, but one thing is for sure is that there is a strong focus among many central banks and governments to improve cross-border payments. It's just it might not be an MCBDC platform.
Maybe just to add, I think I'm a little bit more optimistic than my fellow panelists. I think, what the various MCBDC project has demonstrated is that there are potentially various ways to foster greater efficiency in cross-border payments, leveraging on CBDC. But increasingly, the conversation has evolved to not just look at CBDC as a vertical, but also to consider the interlinkages with real-time payment systems, with regulated liabilities, be it commercial bank money that are tokenized, as well as the world of stablecoins. And I suppose all this exploration would only contribute towards the body of knowledge that would help us further enhance the efficiency of cross-border payments. And if I were to make a prediction, I suppose we may start to see regional networks of CBDC, perhaps emerging, in the not too distant future. But it would be baby steps because there are still unknowns that have not been addressed, And all this would have to go through an iterative process so that we can then transition into a life environment where we can safely say that the benefits outweigh the risks. And that is also the approach that Bank Negara is undertaking when we look at developments both in the regulated CBDC as well as the unregulated cryptocurrency and stablecoin ecosystem.
Lau?
Thanks, Wiki. So yeah, it's always tough to answer these questions that are future looking, because you really need like a crystal ball with some of these things. I mean, I think that we do have to look at the payment system holistically, right? So there's CBDCs, but then there are existing payment infrastructures. And how does a platform like Dunbar potentially interact with some of the existing payment infrastructures? If I look at the SADC RTGS, for instance, as I mentioned, the system has the functionality to already have different currencies issued into the system. It hasn't happened. So I think it's important to understand, well, why has it only been the South African Rand for the past 8 years that the SADC RTGS has been in existence? So why haven't there been other currencies that have been utilized? So in theory, it could be a multi-currency platform, not on DLT, but it could be a multi-currency platform. It's not there. So I think there are complexities with these things, and we would need to look and see, does a DLT environment potentially produce a different result in the SADC region, or doesn't it? It's also about just the overall mix of payment instruments. So you'll have stable coins, you'll have CBDC. How do they interact with one another? I think it's important to understand all of that before we can say, well, this is what the future of the world looks like. I think there are many variables and there are many things that are unknown. Having said that, I do think that if you have a regional platform that's in existence, you could start there to try and leverage some of that infrastructure and the thinking and the knowledge and the expertise that's sitting within that space. And then I do think that we would have regional platforms that get developed and slowly look to scale those regional platforms in the best way. So I don't know how long it will take. I'd like to think that it can move, fairly quickly. But as I say, yeah, we are 8 years later with the SADC RTGS. We still have only the South African Rand as a settlement instrument. So I think I'm between Adam and Kakit. I'm not as optimistic as Kakit, but I'm also slightly more optimistic than Adam, I think. Thanks, Vicky.
Yeah. Thank you. So I guess my takeaway is that, there are multiple pathways to eventually reaching this goal. Some of it could be CBDCs, some of it could be existing connectivity, some of it could be a much better use of existing systems, linkages between these different systems, but we will eventually get there towards cheaper, faster, and safer cross-border payments. And I guess that is really a vision that all of us over here are working towards in multiple different projects, be it CBDCs, digital currency, stable coins, or even just connecting better connectivity of existing payment systems. So with that, we'll close up this session over here. I'll hand it back to Rebecca, who will now bring us into the next part of the event.
Cool. Thank you very much, guys. Thank you. I think we'll all be looking out for the next phase of Project Dumbar. Alan and Wiki are hanging around, so if you've got questions or you want to get involved in the debate between CBDCs and stablecoins, you can grab them afterwards. We're going to swiftly move on to the second section of this event. It is the best session of the event. I have to say that because it involves my boss, Sopna G. Mahanti, who's coming up to stage now. And this session talks about a unique collaboration between the Swiss and the Singaporeans, so MAS Elevandi and the State Secretariat for International Finance in Switzerland. So alongside Sopnan Du, the Chief FinTech Officer for MAS and also the Chairman of the Board for Elevandi, I'd like to welcome from Switzerland Daniela Stoffel, who is the State Secretary for International Finance in Switzerland, and also Oliver Bussmann, who's been a big supporter of ours bringing together Point Zero Forum, and he's also the former CIO for UBS. So Oliver, I'm going to hand over to you to lead us away for the discussion. Please take us away.
Yeah, good morning, good afternoon. Thank you so much, Rebecca, for the warm welcome. It's really a great pleasure for me and excited to host and moderate the panel or the launch event for almost like for the Point Zero Forum that will happen in Zurich, an in-person meeting end of June. Bringing the public and private sector together of the best of Switzerland and Singapore, looking at future developments in Web3 and sustainable finance, and discuss what are potential also the regulatory impact, leveraging these new technology from a Web3 and from a business model changes. So I'm delighted to have Daniela Stoffel from the Swiss government finance department here on the panel, together with Sopnan Du, heading all the fintech and innovation topics at the MIS in Singapore. So I think it's great to have these experts today, and speaking about number one, about the Point Zero Forum, the event in June in Zurich. What is the expectation? What does success look like? What can be expected here? Second is looking at the Web3 development and what are the regulatory implications. Looking at the Swiss and the Singapore regulation. And thirdly, what are the opportunities bringing the leading fintech ecosystems of Singapore and Switzerland together? What are the opportunities from a collaboration point of view? Because I think it's a fascinating development since the last fintech festival in Singapore, with both governments agreeing on working more closely together. So I think this is the background for the session today. As I said before, I'm delighted. My first question would be to Daniela. The question is here, what are the genesis of the Point Zero Forum? Why and why now when? There are so many events around that. So if you share your views from that point of view, that would be great.
Thank you very much, and welcome from Switzerland, and thanks for having me join this conversation. Indeed, you talked about the launch of the Point Zero Forum. I think that launch took place maybe already 6-7 years ago. Switzerland has always been part of the Singapore FinTech Festival. We joined in the I think at the inception in the first edition, and our presence in Singapore grew. It was also based on a very close relationship between the two financial markets. We are very similar in scope, and we are very dedicated to forward-looking solutions, be this in innovation, but also in sustainability. There is a high level of financial dialogue going on, and so it took place last November, on the occasion of the last edition of the Singapore FinTech Festival, that my minister joined the Singapore finance minister in constructive talks, and suddenly we came out with the idea. Having half a year to put everything into place, but we in Switzerland, we are highly motivated. Having identified the Singapore FinTech Festival as the foremost event in Asia in this area, we were very keen to bring it to Europe, to Switzerland, and especially to Switzerland, because I think the ecosystem couldn't be more conducive to achieving the goals we're going to discuss later on. Switzerland is a small country, yet as a financial market internationally very present and very active and very important. Based also, I think, on a very striving of the government. This is why we as the government take place in this endeavor. We are trying to create framework conditions for innovative solutions for future technologies to be able to play a role in the financial market, but also in the real economy. So what I'm trying to say is Switzerland is a very liberal state. We're constantly thinking about the role of the state. What does the state have to do? What does it not have to do? So we're in constant exchange with the real sector and the financial market, especially with our very vibrant tech startup scene. We have more than 1,000 startups in the area of crypto, which again goes back to the fact that Switzerland introduced a crypto law, or introduced crypto technology and DLT into our Bill of Law in a very horizontal and encompassing way. But also our universities rank among the 10 or 5 best in the area of engineering and technology globally, and especially in AI, quantum technology, we are going forward, and we see huge potential also in bringing these aspects into the financial market. Last but not least, we have a vibrant international community, international at Geneva, but also, for example, the BIS, which will also join the 0.0 forum, and that is leading also in the area of CBDCs. The Swiss National Bank is going to be there, the Swiss regulator, and of course our internationally active banks, our big banks and our big insurers, our asset managers, our stock exchange. So what do? We throw the whole ecosystem that we have into this, and I think we're going to talk later on what the interaction between Asia and Europe on this will be. What are we trying to achieve? We're trying to achieve, first of all, focus on, as you said, Web3, embedded finance, sustainable finance. Second, we're trying to focus on bringing together the ecosystem I just described, leading founders, also venture capitalists, private banking clients, and of course, the family offices that are housed in Switzerland. And last but not least, we want to address the future of regulation. What can we do? What do we have to do? What are the demands of the sector to bring about a future that has to, I think, drastically rethink the role of the state, of regulation, of the regulator, also of central banks? We're bringing this to a stage where we also have to discuss, risks, balancing versus the potential. So we're very much looking forward to hosting that event in Switzerland.
Daniela, thank you so much for your insights. So what's your view? What can be expected from your perspective, looking at the 0.0 Forum initiative?
Sure. Thanks for actually to the audience here. We have a physical audience here to be in this session, because I just want to make one thing very clear. This is not an event in Zurich like SFF or any other event. We have a specific outcome in our mind at the 0.0 Forum. And there are many things we are not doing in 0.0 Forum. It is not a large event with big topics, macro topics. We are really going there deep into a select set of topics, as Secretary just now articulated. We're going to focus on 2 topics, crypto and sustainable finance. And if you are a crypto player in this audience, this is the first forum where regulators, policymakers, crypto companies will come together, will have a very open, candid discussion on topics usually you will not have that dialogue in a public space, whether it is financial crime, whether it is KYC or AML issues, whether we are talking about how do we ensure that the custody services are secure from any cyber issues, or or anything related to regulatory compliance. The design of the forum is we will have a big macro sessions, but that's only half a day. Rest of the day, we are going to have a series of deep dive conversation with policymakers, where every topics possible which has not been discussed or not been discussed in an open way, we'll discuss at the 0.0 Forum. There's a level 0 discussion. We'll have a very, very deep dive sessions where all issues, whether from a policy concern, from a business concern, from market concerns, will be discussed. So if you are a crypto player, if one forum you'll not like to miss is the 0.0 Forum, because here no topics is out of the table. Every topic will be included for an open and candid discussion. We're also picking up another topic on the sustainable finance. At a very early stage, this industry is in, and we want to ensure that we have the right discussion with the policymaker, especially who are going to provide technology infrastructure in the space of sustainable finance. Again, the same approach, deep dive, topics from regulatory compliance to disclosure to credible data services, all are on the table through the series of roundtables happening on the sidelines of the 0.0 forum. And we are going to build this platform every year in Zurich, month of June, to pick 2 or 3 topics which we feel strongly about and where the issues have not been discussed in an open and candid way. That's the objective of 0.0 forum. It is a place where every possible conflicts in the industry, especially in the fintech industry, can be resolved through an open dialogue with the regulators. Now, the good thing in the 0.0 forum, you are talking two credible regulators in that. One is MAS and second the Swiss regulators. Having both at the table for you to interact makes a lot of difference as you start thinking about the market positioning of the crypto industry or the sustainable industry when it comes to fintech. So that's the objective. We hope that once we come out of the forum, we'll actually set a path for both the industry to scale and succeed going forward. Of course, we have the Singapore FinTech Festival towards the end of the year, where we'll perhaps pick up some of these topics and go to a much wider audience and share what has been discussed, what is the outcome, and how we are progressing in these spaces.
Thank you so much for your insight. And what do you think? Going through the first year now with the 0.0 forum and having the big event in June, what is success from your perspective? Is it how you measure success? Is it maybe numbers of more startups coming to Switzerland, or is it something that I think the awareness, being on board members of large banks? I think understanding what's the business model change, that I think the technology is now driving from a very Web 2.0 into Web 3, more in a decentralized world. So how do you define success for the 0.0 forum, which is, as Sobseng said, very unique get together of the public and private sector of Switzerland and Singapore?
Yes, I think you already mentioned some of the factors. To me, it will be the weaving of a conversation over the course of the following 12 months, of which the Singapore FinTech Festival will be a stepping stone, an occasion to take stock. The ongoing conversation between the actors that were in Zurich, and also from the government point of view, insights in, as was said, the demands, the next frontier, the urgent questions that need to be addressed, which we will then take into account of our own work in Switzerland. So I couldn't say it more precisely. It is the conversation, it is the interweaving of topics and actors, and the coming back of same actors, of new actors, of relevant voices joining that conversation.
Mm-hmm. So, Manu, is it also, how do you measure success, or what's the success for you for this really brand new initiative?
Well, I would say that one way to measure success in the 0.0 forum is to look at the topics you're going to pick, because at least from a discussion we are having with the crypto players and the green fintech players, we want to ensure that every topic crypto players are concerned about globally, we are picking those topics. So we want to ensure the 2 days we spend in Zurich together, we have touched every possible areas which is an opportunity and a concern for the industry. That's one way to look at. Second, my discussion is as fresh as last evening. We have managed to get every large crypto players, either founders or the CEOs, to show up at the Zurich event. And we're expecting who are left out to should write a note to Elevate the team to get themselves out there. We have got everybody out there. We have got all the CEOs and founders of the industry who are out there in the 2 days, who are willing to share their concerns together. So having them together in one place is a huge achievement for 0.0 forum. And then we have regulators out there who are willing to have that open, candid discussion. So as an outcome, if we can land on 3 or 4 big topics, find a path forward, and able to publish that our outcome in some form, will be a key success measure for 0.0 forum. And hope we get to that outcome, because because that's critical for the success of this industries, especially who are at the starting point of that growth phase.
So, Bernard, thank you so much. Before we move on to the second part about regulation and Web.3, I'd like to invite the audience to submit your question. I think Daniel and Submana will be delighted to answer your questions, so feel free to submit them online. That would be fantastic. So the second part of our discussion today is all about regulation, because I think with the technology enabling new business models, new kind of services in financial services. Key question to Daniel is, from a regulatory point of view, how do you see now Web 2.5 or Web 3 impacting financial services? And what do you expect? What do you see? What kind of changes do you see already happening and will happen in the near future?
Yes, if you look at regulation from a traditional point of view, it's always been about stability of the sector, about customer protection, but it's also been about reputation, integrity of the markets. Not losing sight, of course, of these very important principles, but we are definitely very much asked to look forward to see the potential, to see developments, anticipate them, and create a regulatory framework that allows for innovation to take place. Always, as I said, weighing the risks and chances against each other. So we need skills. We need regulators who do understand the new technologies. We need the understanding that this might be a complete changeover in what we call the sector, the financial sector, business models. We need to be able to address actors that are actually financial market actors that wouldn't at first sight traditionally count under that category. So we need to be able to be creative. We need lawyers and specialists in technology to be able to talk to each other or to actually do each other's work and inform each other of what is needed. It is very demanding. And also how regulation works currently on a traditional basis, or also the work of the supervisor. It is very well organized and structured world. We need to be able to address insecurity, uncertainty about the future, yet allow it to happen. And we in Switzerland, we really are priding ourselves in being able to do that, and not just, as has been seen many times over and over again in the past 5 years, where you let a development happen, then suddenly you realize it's dangerous potential, or it's danger to stability, or what have you, and then you just stop. And you sort of forbid any further development. We want to have an organic growth, we want to have controlled development, and we want to be at the forefront of what is needed in creativity.
Thank you so much. So at the end, it's finding the right balance between enabling growth through new technology, on the other side, protecting investors, protecting customers from that perspective. So is it also, as both ecosystems, the Switzerland and the Singapore system are the forefront in enabling technology, so how you see regulation here from a Belgian perspective, enabling the change towards Web 2.5, Web 3 business model changes?
Well, maybe I'll take a pause to answer this question. Before, I almost forget that one of the key participants to the 0.0 forum are the investors themselves. We're actually bringing investors to the forum because they have certain questions for this industry. So if you think the framework, you have founders who are pushing through this narrative of crypto industry. We have founders who are pushing through the narrative of sustainable finance industry, but the investors are not sure whether this is something they want to bet on. So we're also bringing investors to reduce their level of anxiety so that we can have that dialogue at the 0.0 forum. Now, to your question on this, yes, I think as we are transiting to Web 3.0 architecture, there are certain pieces which will come to regulatory discussion, especially when the infrastructure is part of a decentralized architecture. When we talk about codified regulations, when we talk about when you tokenize these assets, how to deal with the risk associated with this tokenized assets. There are a whole set of regulatory concerns which will come out of this discussion, so that we have products in place, at least in a pilot and in a pilot stage, which can be demonstrated at least in the next 6 months, and then we're able to put together a framework where whether you are tokenizing a currency or an asset, whatever you're doing there in that space, you should be able to deploy this in a market in a safe and sound way. Well, I don't want that all of us should get drowned with this cryptocurrency discussion. Also, we want to ensure there is a wide range of crypto asset and tokenized tokenization of other set of assets to be discussed at the forum. And if we can bring all this together, then the whole market will at least seems to, from our perspective, move to a real economy outcome rather than a speculative currency trading, what seems to be the image now of this particular industry. On the green side, I think we don't have much choice there. By design, green finance and the technology which will support green finance has to rely on Web 3.0 architecture, because a lot of this data set which is going to power the green finance are coming from different endpoint where the real economy is operating, and those requires infrastructure to where you can pull data, trust them in a decentralized way, process them at a different jurisdiction, and create disclosures and financing which runs on top of that. So Web 3.0, when it comes to green, is a natural fit. When it comes to the crypto side, it has been part of the use case which is driving this architecture, but we see there are a lot of regulatory paths to clarify before we get to a full-scale real economy application.
So I think thank you so much also for your perspective on regulation. I think it's important to mention is I see in both ecosystem, not only the crypto topic now evolving in also from regulation. I think in both economies, I see also that the regulated assets, no, there's the tokenized assets that are following the security laws are also taking off now. This in Switzerland, you know, the infrastructure by the 6 stock exchange now, this SDX now ready for production is the license, trading license, etc. The infrastructure in place, the similar activities also in the ecosystem of Singapore, etc. So I think the regulated topic that also a lot of financial institutions are looking into that, and I think in both regulatory jurisdiction, I think the environment, the foundation is in place. So I would say I think the crypto and also the more regulated digital assets, I think in both economies are really enabled for that from that perspective. So I think this kind of discussion we will have definitely in June, in the June conference. Yeah, so sorry.
I was saying that one thing we should all watch out for between now and June, a lot of licensing signaling will come in. So do watch out for such licensing signaling as we go to the June, and which will make it much more clearer how the regulatory intent is going to play out.
Yeah.
So if you are a crypto player, don't miss it out. So do show up there.
Very good. No, I think it's a perfect segue, Dania, to our next part of the discussion about the opportunities with bringing Asia and Europe together, especially Singapore and Switzerland. So what kind of opportunities you see coming out of this kind of initiatives?
I really see it in the combining of forces, you know, the very dynamic development in Asia, and the perspectives that were just mentioned, also regarding the use of data. Whereas in Europe, you know, and this is an important keyword that I also should have mentioned, is, you know, the legal certainty for any company that tries to establish itself in financial markets, the sort of the trust center that Switzerland as a financial market represents, the niche solutions we find for new technologies and new business models, combined with the dynamic perspective in Asia, sort of the quality, trust, sort of careful and caring and secure center that we try to provide in Switzerland, and combined with you know, the inevitable drive forward and development globally is the big chance we see in this event.
So what's your perspective? What kind of opportunities do you see in respect to the collaboration between Asia and Europe, especially with Singapore, with Switzerland?
Well, in both the topics I'm talking about, green finance or sustainable finance and crypto, I think both the jurisdictions have a very forward-looking stance. So if we can have the right dialogue with these two regulators, I'm sure we will come out with some clear initiative where both market will be a very conducive environment to deploy solutions, infrastructure, use cases, and some real application in this space. So it's very important for the audience to understand that engaging with us, whether in Europe with the Swiss regulator or in Asia with MAS, at the forum, and having that discussion, having that clarity on where you want to go and take this forward is very critical. What comes out of 0.0 forum could turn out to be a real application of some use case, or could be a real application where there's a real value of this industries which is growing at a fascinating rate to see some real adoption. So I'm hoping that from this dialogue, we will see a cross Europe, Asia implementation path for these companies.
Mm-hmm. So Bruno, you mentioned several times that beside the Web3 topic, sustainable finance will be also a focus area for our event in June. Sitting boards of large banks, the climate risk implementation, sustainability implementation is a huge topic. Can you explore a little bit, why for you the sustainable finance topic is a really important one right now, and why is it also on the agenda for the 0.0 forum?
Sure. Well, sustainable finance is a huge topic, but just on the forum perspective, we are actually picking up a particular topic which is going to enable sustainable finance, which is the underlying architecture. Whether it is providing access to the data which will require for disclosures, whether to monitor the green implementation, whether to measure impact, and I think that's where the focus is, because for the banks to comply to the 2050 requirement, I think they need to start building that capacity and capabilities to able to process that data and start complying to the regulatory expectation on the disclosure side. So for us, it is very critical to ensure that we have those market infrastructure to support that goal, which of interest to both to the regulators and the banks. So yeah, so that's where the focus is. In fact, we are trying to narrow down our scope at Zurich to only talk about 3 things: access to data, how to ensure that data is credible, how to ensure that disclosures are based on standards which is acceptable across multiple jurisdictions, and talk about real impact to each sector, and find out the players who can provide the right set of data to power the green finance as an end outcome.
Thank you. Daniela, any final thoughts, especially in respect to the sustainable finance area?
Yeah. I could echo what Subnendu just said. Really, we've identified the ability of the real sector to do climate disclosure, to do reporting on non-financial elements as the key factor for financial institutions to succeed in satisfying the great demand on the investor side. So we have already created a green fintech network. The answer for us is really in the fintech market to be found. To have clear data, to have reliable data, and to be able to do this in a non-bureaucratic, very fact-based way, to have your company, your enterprise be transparent on its transition plans, but also on its current status of where it stands on the CO2 sort of agenda is paramount, and to have an ease of interlinking the real sector and the financial sector, not to make this a costly, bureaucratic, static exercise that creates more costs than benefits. This is what we're looking for. Mm-hmm. And this is what we're trying to promote. Thanks.
Thank you, Daniela. Yeah, as you can see, I think Daniela, Sopano, and myself are really excited looking at the 0.0 forum end of June in Zurich. This is the best of 2 worlds now, because I worked still working in both ecosystems now with remember this, so first discussion about the fintech plans in 2014-15. Starting the fintech festival ideas, and now it's a really big. The same also be part of the Swiss ecosystem with one of the co-founder of the Crypto Valley Association, now over 1,000 blockchain and crypto companies. As Daniela said, I think it's fantastic to see how both ecosystems have evolved over the couple of years, and leading one in, especially from a Web3 perspective, and bringing that expertise together in June, as now this in-person experience, invitation only, bringing the public and private sector together to discuss that and see what kind of opportunities, what kind of challenge can be tackled. I think it's a fantastic platform that I think both governments now are establishing, and I'm excited to be part of the journey. And there's much more to come. And having said that, I want to thank Daniela and Submani for their insights and feedback. Thank you so much for joining the panel today, and I want to hand over back to Rebecca.
Thank you guys. Before you go, I have one last question for you on stage, and thanks for sharing more about Point Zero Forum. So I'm going to bring back a green shoots tradition and ask each of our panelists to share a green shoot story. So a good news story for 2022. The world is a dark place at the moment. We all need a bit of positivity. It can be what you're most looking forward to at Point Zero Forum, a fintech that you're following at the moment, a new idea that you think is going to add a lot to the industry. Over to you, Sopnandu, in the hot seat.
Okay. So, well, my inspiration, in fact, when I'm posing the question is yesterday night. We are embarking on something I think we never imagined in our life we'll do, sitting in Singapore. We are embarking on a huge global literacy program where Elevent is going to be part of that. Proxtera, one more platform we have. We're going to educate almost 7 million women in India and a huge number in Africa and in Philippines, small and medium-sized businesses on a level 0 financial literacy and digital literacy program. Now that's a huge thing, but really what really made me think, yesterday one of our partner, Pinbox, sent me what should be the learning material look like. And they took all the materials we created from the academic sector and converted to a comic strip. And I have never seen such a engaging comic strip. When I was going to that comic strip, I think I understood finally what is digital finance means. So I'm hoping once we release this, it will be an inspiring set of information for all of you to process. And we're also quite proud that we are going to make real impact in our society by upskilling small and medium businesses in Africa, Asia. And I see Ant here, they're part of this whole program. I'm looking forward to their partnership.
He's looking at Carrie in the audience. And it's quite hard to top that one, I think. So look forward to seeing that comic book. But I'm going to go to Oliver. I'm going to go to you next. What's your green shoot story for this year?
Green shoot story is really, after 2 years, everything online. This will be my really first in-person conference with such a unique list of attendees. This is something that I always missed in the last 2 years in person exchanges, networking, etc. Online is good from a productivity, but I have to say, bringing both ecosystems together in June, this will be my highlight of the summer.
Nice, thank you. And finally, Daniela, please do share your green shoot story with us.
Sabrina mentioned the dark times, and here in Europe, there are especially dark times currently and a lot of challenges. And of course, a lot of conversations are going on at government levels. And to me, the most inspiring moment was recently in one of these discussions when a G7 finance minister said, in very simple words, he said, countries will have to decide if they want to be part of decarbonized prosperity or not. And decarbonized prosperity, that was for me, putting it in a nutshell, on the one hand, you have a future, you have innovation, you have growth, you have a future for yourself, for your family, for your society, for your country. And on the other hand, it is decarbonized, and the two of them go together. You couldn't put it more concisely, you know, what we're all aspiring for. And I was very grateful for having that finance minister use these words in the exact current circumstances.
That's brilliant. Thank you for sharing. I think that's an important one to take forward for the second day on sustainable finance at Point Zero Forum. So that's a wrap for us today. So if you've joined online, thank you so much. Thanks for joining us. For those in the room, grab a drink. I can see they're at the back there, so please make your way over and enjoy the networking. Oliver, sorry that you're missing out on this networking, but you'll be with us soon in Zurich. Thank you, everyone. Enjoy.